Welcome back. Good morning, Cooks. We have the economic calendar in front of us today. We have a very, very light New York session in terms of news. There's basically nothing. Nothing's going on today in the New York session as far as economic data that would draw any attention of mine. So we're seeing the effects that I mentioned yesterday whenever we start a brand new month. First day or two are usually consolidation Z days. Still have to take and see if there's consideration to take a trade. But let's take a look at the market as a whole. Go one more time to the charts. Okay, you should be seeing the dollar index. Thank you for that. Okay, so we had an outline provided to you by way of the forum last night, and this was a continuation into London. So this is the setup that we're watching to see if it would unfold. I gave you a scenario where we'd have the opening price at 0 GMT. Price would come down, hit this level here. I was pretty close in regards to that. We did get the bounce. It did stall at the short-term price swing here that we measured, and we're still inside that range. We worked several times below the opening price. We did it here, 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 and that we're back above it. So we're in a new session. Stops have been left intact above these two highs here. There's still maybe one more little punch to go higher for dollar, and that should help the euro dollar short idea that I was proposing. So we have a higher low in here as well, and it bounced off of equilibrium based on the price ranges this low to this high. Okay, so what I did was I mapped out the London session using 0 GMT and the idea I taught in April's content using the price swings previous intraday. So on the dollar, we saw price come down here, reject. We saw a stop run yesterday below here and then reject. Our ideal scenario is to seek the liquidity at these buy stops. That's what I think the larger draw is on price. So even if we stay consolidated the rest of the day, tonight I still will be looking for something very similar to what we did here today for a run on the buy stops on dollar. You can't see my mouse? You'll see it in the recording though. I'm not sure why it doesn't show up on here. But you can clearly see that it's delineated on the chart, the buy stops on the left-hand side of the chart. Okay, so let's mosey on over to the euro dollar trade here. So I framed this out as well. We had the price swing from this high down to this low used, and we were looking for premium in here to provide a sell. It stabbed up a little bit beyond that, worked the opening price once, twice. Now we're slightly above it in here now with the neutral dollar as well. So what I want to do is I want to actually move to the sidelines because we've got no news that's going to potentially be a driver. We have no directional bias now. We're still in consolidation. So we're going to work the same scenario unless something changes the rest of the day. I'm going to be looking for the same scenario to unfold for tonight. So if you have anything on euro dollar now, move to the sidelines. Don't look to take another trade. Just move to the sideline right now. If we go over to euro pound came up to the 62% retracement level up here. It found a premium level based on the range of this high down to this low. We went above equilibrium. So we are in premium here. We did see some movement that would support a lower euro dollar, but the problem is we saw strength come in on pound. So pound came down, took some stops out here. I actually was last night looking at this. I didn't share it with you, but I was looking for this gap in here to close, and it never made that. So if I would have been short looking for that objective, I never would have got that. So in full transparency and disclosure, that level was anticipated on my own notes, but it never got there. But this strength here is what messed up the euro pound, which also took the strength from the euro dollar short. Okay, so these scenarios are still in play. We're looking for the run on the sell stops. I'd rather see it stay in a real nice tight consolidation again, because that way we'll have probably a much stronger scenario unfolding tonight into Asia and to London. So we'll be doing the same thing. I'll outline it again, put it in a chart format, and I'll give you the scenarios I'm looking for as well. But let's go over to Aussie dollar. We saw the completion of the market maker buy profile and came up here, hit the stops as we outlined. Boom. And then we saw a retracement. I know some of you have shorted up here today. You were sending me tweets right before the start of the session, so congratulations on that. But I have no play on Aussie dollar, and I have nothing on dollar CAD. Dollar CAD's also neutral. It's staying in the range just like we mentioned the first 2 trading days of the month. Generally, if they start on Monday and Tuesday, you'll get this classic scenario. Pound, it most likely will want to go back into the middle of the range, closing around 128.95, 128.93. That'll probably see where we close today. Again, euro, dollar, no movement at all. No movement whatsoever. I got really interested last night because I saw it break down right here on this leg here. And I was like, okay, they held it up here for a while. One more time, fake pass, like you're going to take a new high out. No, it just stopped dead in its tracks. Dipped one more time below here, and now we're back in the middle of the range for today. So if we went through an entire London session like that, and we haven't seen any real setup going into New York, and it's 8 now. It's 8:15 almost. So we're an hour and 15 minutes into the New York session with no news. It's just better to move to the sidelines. It's probably not going to have the volatility to give us a payment. So the scenario still remains the same. We're looking for a fair value gap here and here to be filled. ADR today is 55 pips. What I was looking for is the scenario very close to what we're seeing here. I was hoping that this would have been the high of the day, and then we could project down 55 pips and then look for a potential run on this low over here, taking out the liquidity as well. That gap from 2 Sundays ago still has my interest. I want to see if we have any breakdown this week to get to that. And we may end up having to punch higher to get people tripped up on the wrong side and then send it lower. So I'm looking for that scenario this week to unfold. I'm looking for a reason to be short euro dollar. Let's just put it that way. I try not to use Sunday if I can. There's a couple different ways you can do average daily range, but you should be seeing 55 pips on average daily range on Forex LTD. I'm going to teach you the difference between the Judas that's seen in the 0 GMT hour start and the midnight candle, but that's got to come in your lessons. I'm not going to teach it before we get into that because it takes the whole lessons away. All right, so I got to get a new chair, man. I hate this. I'm sitting here with shorts on, and I have a leather chair, and you know what? Our air conditioner wasn't turned down low enough, and it got really warm. So my skin's sticking to this chair. It's nasty. I can't stand that. All right, so again, we got nothing for dollar CAD, nothing on Aussie dollar. Aussie dollar looks like it could come down to, if you are short and we can get to this high in here, which would come in at 75.10. So if we touch 75.10, you want to be taking something out. It almost got to it here, it looks like. Oh, yeah, almost got 1 pip away from it. But you definitely want to be, I'd take something now if you're short, because we're below this low in here. And it may not even get down to that level here again. So if you are short, take a big portion of it off and move to the sidelines and let the rest of your trade pan out. But a little disappointed. I thought for sure that we were going to see a little bit more breakdown going into to New York. We didn't get it. Again, as a reminder, this week we'll be seeing the outlines provided the same way that you saw last night. If there's going to be a really decent London setup and other additional information you'll need to know that changes from when I posted around 8:15, 8:20, that will be coming in the way of a pre-market recording, and it'll probably be like a 4 or 5 minute video. So, and all I'm going to be doing is outlining how I'm going to play the London, but I'm not encouraging you to follow that. The second half of this month, I want you to do exactly what I'm saying I'm doing with my demo, but I'm going to provide you a pre-market analysis. I know some of you are going to say, oh, I'm going to do what you're doing, but try to work out your own scenario. Use your own entry, use your own stop, use your own for first take profits and all that business. But I'll be sharing that with you if it's a London setup that's really strong. But apart from that, I really don't have anything else to discuss this morning, unless you have some questions that were germane to this setup here. I'd be willing to answer those, but I don't want to provide anything new because I want to really be focusing on the setups and then let the lessons speak for themselves this month. Where was my original stop on euro dollar? Right up here. This is 33 pips from the opening price at 0 GMT. So my stop was up here. 109.42. No, I went in at the market. It wasn't a limit order. I stayed up. My wife and I, we had to plan our latter portion of our week. So we stayed up for a good deal of last night, getting all that together and stuff and getting things packed up. No, right now I would not be in the trade, Chase. We just neutralized it and go back to the dollar index. Dollar index hasn't moved. We had to respect off that level we called, but we were back in the middle. So we didn't get through this short-term high, which would be necessary. We didn't see it happen in London, and we didn't see it happen in the first hour of New York, which would be really high probability scenario to see it continue up to run the buy stops seen on April 26th and 27th, as outlined on your chart here. So we moved to the sidelines. Wow, there's a lot of questions. I didn't catch any news by way of Trump and any comments he made. I'm honestly, this weekend and so far this week, I've been preoccupied with taking our son down south to get whatever he's got to get done with him. 33 pips is basically 1/3 of the average daily range of a 100 pip day. And I think, if I'm not mistaken, I taught that somewhere. I just made so many videos, I can't remember exactly. I made that teaching. It's rare to see it trade higher than 33 pips from the opening price. And that's what I use to 0.33 trade, 33 pips, which is basically 1/3 of 100 pips average daily range. Not that it was 100 pip average daily range expected today, but that's generally my rule of thumb. Hang on one second here. I thought 0 GMT trading is only for Aussie and New Zealand and Japanese pairs. Why are you trading euro dollar with 0 GMT? I'm teaching the 2 entry points that I use for trading, and that's what they are. 0 GMT, which is if the new day start, and then you have 0 GMT, 0 GMT, which is if the new day, beginning or start of the day, and then you have midnight, which is true day, based on the New York Open. So that's the 2 scenarios I look for. The pairs that have the highest probability of finding scenarios that really pan out well at 0 GMT is those 3 pairs or markets, the Aussie, New Zealand, and the Japanese yen. It doesn't mean that the other pairs won't trade that time of day. It just generally, you see far less drawdown or movement or Judas occur in those 3, Aussie, New Zealand, and yen around that 8 o'clock hour New York time. But if you've gone back over your data, you'll see there's plenty of examples where the majors, apart from the 3 I just named, they have really good setups as well. Is there any special configuration for the ICT average daily range indicator? No, as long as it's set for a 5-day, it's all it is. But I'll have that on there. There's a couple different variations I picked up on average daily range. I'll leave it to you to decide which one you like. But I generally stick to the one that I started with. And I didn't create it. Someone shared it with me on the internet. Did you enter after the spike or with the spike? Once it punched through here and came back up and touched this level again, as it was moving away from it, that's when I hit the sell. Why not hold through New York? Because the price action doesn't support any, there's no impulse leg. We're staying consolidated really tight. And typically this is the first week of the month. This is what you get. This is really, really classic price action for the first week of a new month. So there was setup there. I took it, I outlined it, but we didn't see any movement. So nobody really should have got hurt with this one, even in a demo. Why you have an 89 pip average daily range, Mohammed? If you're using Forex LTD, it should not be 89 pips. So if we wait for London, Judas, man, you guys are flying by with these questions. Hold on. So if we wait for London, Judas, we can have the same stop level, but our stop loss is less since we bought at a bit higher. Is that correct? I'm not sure what you're talking about there, because we weren't buying anything today. We were selling. Unless I misinterpreted, I apologize. 0 GMT on Forex LTD is 8 o'clock around here. Why is it? I already answered that one, 33 pips. Well, obviously we can say it wasn't a strong setup now because it's hindsight, but going into it, it had all the hallmarks that could have unfolded. Are the exercises less fruitful if you are not awake at 0 GMT? I wake up at 5 GMT, so can enter London. Either or, I'm not trying to twist your arm, Sebastian, to do either one of them, but to make you a more rounded trader. That way you can see the setups that will sometimes may not be as clear in London because it happened in 0 GMT Asian. No, we're not flying. We're driving. Would it make sense to use midnight New York instead of midnight GMT? It often provides a better entry. That's pretty much basically the same thing I answered with the previous question. There's going to be times when London will simply not give you a Judas. It'll just roll over, and the setup actually occurred at the Asian session. So you have to be mindful. And if you remember, when I first started talking about London, there's 2 times of the day, and it's what we're going over here in the mentorship, but I just was very vague about the Asian session. Now, it's because it's not an active session generally, but there are conditions and characteristics about that time of day that will permit you to enter and not be up during London. You can frame all of what you would expect to see in London in the Asian session if the conditions are there. And last night, the conditions that were outlined as you see here, but we didn't get any movement at all. It's basically staying in a tight range. Why end of market maker on Aussie, why not retrace to optimal trade entry zone and long this market maker continuation? Given the conditions of the marketplace, we're in a big trading range. I mean, look at the dollar. We've been consolidating. With the gap remained open, we haven't broke down. So that is a profile that indicates we haven't seen any movement by the big boys. Apart from that gap opening that sent us in this big long trading range, we have not moved up to close the gap and we have not broken down. So because we don't have any continuation or insight from them on a longer term directional bias, if we see a profile complete like market maker buy or sell, when they complete, neutralize the idea, go back to the sidelines, don't do anything more, because you don't know if it's going to continue up or if it's going to retrace and go completely the other direction. I don't have a long-term or weekly bias right now, and it's also first week of the month, so we'll have your typical noisy news releases that will probably be holding price in consolidation until we get to it. What you outlined here on a 15-minute is exactly the same on daily and weekly. I'm not sure what you can do. Okay, yeah, I think I know what you're asking me. Can you do the same thing for like trading the weekly ranges and the, well, let's leave it at that, weekly ranges, yeah. If you look at a weekly chart and do the similar things that we're doing here, looking at the most recent price swing, that will lead you to getting really good one-shot one kills. But there's other little subtle nuances that go along with that. But yeah, you're on the right track thinking like that. Yes, you can use 0.33% of the average daily range. But the problem is if we are in a consolidation, you're going to learn that many times that can be punched through because of volatility. The stops maybe ran a little bit more aggressively and then pull right back to the middle. So when you're using, for instance, if we have a small average daily range, less than 100 pips, and you're using 33% of that, that's not giving you much in terms of a stop loss. And that could easily get snagged on an environment like we have here. And it could stop you out and still go nowhere. So it takes your stop, but doesn't give you an opportunity to get paid, even if you stayed in the trade. Would it make sense to use midnight New York instead? I answered that one. Ideally, we shouldn't trade this due to non-farm payroll and FOMC this week. Kane, it's what you would do if you're trading only live funds, but since we're executing and practicing on entries and such, we got to participate every single day. So that way you can see what it looks like, how it's set up, and then when we get past all of those news drivers that you just mentioned, you'll see that the markets will be a little bit more fluid, hopefully. Why do I refer to GMT and not New York time? Because as you can hear in my comments here, a lot of folks are referencing time in their individual respective brokers because they're looking at their live platforms, and that's what causes the confusion. So I'm trying to draw everybody's attention right back to the demo account you see here, which is Forex Ltd. So their data, regardless of where you're at in the world, they're going to be forcing you to view price and time the way I see it, the same platform, same time, everything. So by calibrating that with New York time, you'll know exactly what I mean. It should have been easy enough for me to stay in New York time, but a large number of you simply won't get with the program. So I have to go interchangeably. But it makes sense to use midnight New York instead of, I did that one. Where do we get the average daily range indicator? I can put that up today on the forum, so you can download it and put it into your MT4 platform. But I'm sure there's a lot of different variations. A lot of folks have used it and done some coding with it and made different variations of it. I've seen some of them. I probably haven't seen all of them, but I've seen some of them, and I like the one that just gives me the lines that would shoot for the targets. They move throughout the day, and then finally, once the higher lows form, they'll pretty much give you a real good idea where the opposite end of the daily range. It doesn't always cap that daily range, but it gives you a good idea to hold for. Will Williams percent R be taught? Will be taught to us? Yes. You're going to be using that when we talk about sentiment. That's the only reason why I use percent R. Yes, we'll be going over Asian range setups, Asian sessions. Yeah, I'm not sure why my cursor shows up on. I think it's probably an Apple issue, because anybody that uses a laptop or a computer, they can see my mouse moving around, but on a smartphone or an iPad, I usually get the folks saying they can't see my cursor. Yes, John, I used the daily line box MT4 indicator, but we ain't got to that part yet. You have to understand what I'm looking for to even use those things. Good job. I see a lot of you actually participated. Took really little time at all for me to throw it together and put it up on the forum. I actually prefer that going into a long-winded video. And if the first of the month occurs on Wednesday, Friday, we will see regular price action. Okay. If the start of the month begins on a Wednesday through Friday, are we going to see normal price action? Okay, I got what you're saying. You'll find that it generally will, but always be in the lookout for the first week of every month to be narrow consolidation days until we get into like non-farm payroll in that business. But generally, you're going to see that, and I've been made a liar in recent months because there's been a lot more volatility than normal, and Raj and other ones in my group will make a point to remind me that it's supposed to be this way, but we're seeing the opposite. Now we're seeing what would be normally expected. So this is the general rule of thumb. You expect this type of price action. But since we're short-term intraday scalping, it doesn't make a difference. We should be able to find something. But today it just didn't move around enough. Not a losing day, not a winning day. Just couldn't give us any kind of movement. The reason why I outlined the long on the dollar is the buy stops that you can see here in the left-hand corner. That's being outlined. It's those two highs up there. I think that the larger draw on price, I think there's more influence to see price go up there, either to fill the gap or to go up there and run those stops. And then if we're going to go lower, they could take it lower after that. And no one would be in the market taking profits as it goes lower, because they'll knock them out by going up above these buy stops, then take it lower. But either way, whether they go up there to reverse it or go up there to close the gap on dollar, that's enough for me to see bullishness on the near term to facilitate a short in foreign currency. So that was the largest real draw on it. I'm just looking for the liquidity right now. The profile we're in is consolidation, so you have to look above the highs and have to look below the lows. And we basically worked all the sell stops below here with this low here. This low has been taken out, and we haven't yet really worked a lot of the buy stops. This is a high, a lower high, equal high, lower high. So the liquidity is going to be seen best suited for rating in the form of the buy stops on the highs on the 26th and 27th of April on the dollar. I appreciate that, Joe. I think I've answered that question already about why I killed a market maker buy profile for Aussie. It's already been mentioned. Tuesday, high of the week in Aussie, US dollar. Any thoughts to reach the daily fair value gap below the market? As I mentioned earlier, I don't have opinion on Aussie. Aussie has owned me in recent weeks, so I'm going to stick to this as a trophy win. I'm going to be done with it. I called the buy stuff and wanting this to be the objective, so now it's done that, so I'm moving to sidelines. There's Aussies are waiting for me to get in here and trade it again. Yes, you will be learning index trading, and it's not just the day trading stuff. I'll teach you the same scenarios, just condensed with positions, short-term, swing, and day trading. Regarding New York, are we considering what London did in terms of initial swing up, down, central bank dealers range, etc.? All right, Christian, as I outlined earlier, and pretty much the scenario that was outlined in the chart for our case study for this past night, there was really no other information that I needed to go on because of the profile that we're trading in. We're in a large consolidation. We look for liquidity above the marketplace and below the marketplace. So I didn't have any use for central bank dealers range because I know where the stops are, and I'm playing that more than I'm doing anything else. And if you do all your projections, there really wasn't much in terms of the Asian range or central bank dealers range to alert you to anything for the dollar index. So that's why I just used the price swing of this low up to this high with the expectation they were going to expand up and take the buy stops on the 26th and 27th of April. So I would want to see a retracement down, and that would be enough to put us into a discount and then see expansion. We've seen it. We just didn't see any volatility beyond that. But you'll find that this is what the scenario you'll see as we outline each day this month and going forward. When we have these intraday price swings from the previous day and a daily bias of where we think price is going to go, when these overlap with all the other PDAs, it's like magic. It really is. It's like perfect Swiss craftsmanship. It just hits it and goes the other direction. It goes right where you think it's going to go. Yeah, I thought this was going to go lower too. I thought Eurodollar's sell stops would be taken here, and if it did that, it's really easy two little gaps to close in. So that's still the scenario we're looking for, unless we get ridiculous and go straight up. I can't see that right now. A lot of comments. I like these exercises. Can we keep going? That's pretty much the first 2 weeks of this month. We're going to do things like this. Am I considering FOMC and non-farm payroll? Yes, but we still have to take setups that may be there. Is there any news we should not have as a? Okay, let me read that again. If there is news, should we not have a bigger stop rather than 33 pips? Well, I'm not suggesting that you put 33 pips on. I'm just telling you, when I was asked what was my stop, it was 33 pips above the opening price, because I didn't believe that we would see a significant rally up above this high at all, but it did. It just poked its head above it. That would have been a turtle soup. But I waited for that return back up into that level there that we outlined in the chart, shared on the forum before London even came in. Ideally, your stop should have been about 50% of the 5-day average daily range, or like I'm indicating here, you already learned this in the mentorship. The average daily range is, if it's average of 100 pips, 1/3 of the average daily range generally will be the cap on the open up for down close. So from the opening to the high of the day, generally doesn't want to go more than 33 pips, or 33% rather, of the last 5-day average daily range. So if we have a small average daily range, we can't use that. So I felt really confident that 33 pips in this point would be favorable. But you'll have all the conditions given to you why you'll be looking for this or that in terms of your stop. Don't be in a hurry to try to get it all now, because there's a lot of things we have to worry about before that comes. What about blending 12 a.m. London and 12 a.m. New York price? Well, again, you're asking things that will be taught in the lessons. So I was asking specifically about this setup that we outlined today. I don't know what they're going to do in terms of the interest rates, but if they do raise them, Mike, it'll probably be another 25%, 25 basis points. I don't think it's going to be anything bigger than that. Now, they may shock us and hit us with a 0.5% later on, deeper in the year, but I think that probably will be into like our September, August time period. Have you seen one without a Sunday candle? I'm assuming you're asking about MT4 platform without Sunday data. I don't know of any that have the dollar index. So if any of you are aware, don't send it to me in the questions box. Just make a post of it in the forum, and everyone, I'm sure, will be greatly appreciative of it. Incidentally, let me toss this in there. I'm seeing other forums being posted, and it's me that's deleting those posts. I'm not advertising for another forum, certainly not one that makes a case about bashing me. The guy makes the traffic income off of that stuff, and I'm not feeding him by putting his links in my forum. So that's the reason why your post the other day was deleted. I did that. So if you have anything over on those other forums, you're welcome to post those here, but I won't let anything get taken from here, like to Baby Pips or another forum. I'm not letting that happen here. Is there a IPTA for each asset? No. No, that's a good question, though. IPTA is highly specific to just Forex, but the overall market manipulation ideas are generally across the board the same. But IPTA is highly time sensitive, and it's very heavy in specific characteristics. Do I like scalping the markets? This month's teaching. I have done a lot of scalping in my trading. I've done a lot of it. But I learned that my way that fits my criteria as a trader and my lifestyle and my disposition is I like to see what I think the week's going to do, and I want to trade in that direction. So if I'm trading anything less than a one shot, one kill, which is the short term idea of getting in either Monday, Tuesday, or Wednesday and holding for Thursday's New York Open, then I'm just going to be day trading in the direction I think the weekly range will go. And if I don't get a real good setup for day trades, then yes, I will look for scalps in that direction. That's how I trade, but I don't want to force that on you, because that's the worst thing a teacher can do, is try to make you a carbon copy, because then you'll probably miss out on the better approach to trading that you've learned a lot already. So if you determine how you want to be a trader with this information, and I've had no influence except for showing you the path to get to that, you'll be a far better trader than I am. And that's the goal. But, if there's nothing to do, and I absolutely feel like I want to be taking some participation in the marketplace, and yes, I do scalp. If the dollar index broke above yesterday's high, would you feel confident it would run for the stops? If we go above this high, yes. That's exactly where I believe it's going to go, above the April 26th and 27th. That was the whole outline for the trade. When day trading, buying and selling at PDA, you mean intraday discount and premium ones? Yes. Because you're already working off of a higher time frame bias usually anyway. But when the markets are in consolidations like this, we're looking for liquidity. So essentially, we're basically looking for expansion out of this large range that we created after that big gap down on the dollar. So there's a lot of liquidity up above those highs on the 26th and 27th of April that haven't been touched yet. And they've spent more time trying to go lower, and they take out all the sell stops below the marketplace, but they won't take it higher. So I think what they're doing is they're building a lot of volume on the buy side by keeping the scenario like it is here. So to me, it just looks like the majority of the money is on the buy side. So that means that they're going to take the dollar higher. Even if it's going to go lower longer term, it's in their favor to take it up there, neutralize those buy stops, profit on the way up. And then if you're going to reject it and reverse it, that's the ideal scenario, because everyone's going to look at that as a breakout to close the gap. And it may not happen like that. Yes, I'll be teaching you the London lunch. That's a couple things that didn't get shared in April's content and day trading that has an overlap into your scalping. And that's part of it, is the London lunch stuff. No, there won't be any rants in these sessions. Do you want us to do both entries or just one of them? I want you to do both of them. So in other words, if we're looking for a scenario like today, we're looking for a higher dollar and a lower euro. So the ideal practice session for you would have been get short at or near the opening price. Let's go to the euro dollar. Would be here, get short here at this price level, or something above it. Okay, it could be 10 pips, it could be 20 pips. It could have been this high. Some of you that would have been more astute, saying, okay, well, if I have the opening price and I'm looking for a rally up to sell into, what happens if it goes above this short-term high? That would be a good scenario. And that would have been almost basically what I did yesterday, intraday, by selling above this short-term high. Last night at London, you could have used that as a scenario. So that's what I'm saying. You're going to be encouraged to do different things, not the cookie cutter, but you're going to see what happens when we do cookie cutter approach. The last 2 weeks of this month, you're going to be expected to do the very thing I do, from the entry, the stop, the targets. They're all going to be the same. And you're going to see how it will feel stilted and wooden. You won't want to do that. Regardless of what the results are going to be, you're going to feel like you need to do this on your own. And that's the whole lesson behind it. Not that you make everything I make or lose what I lose. It's to show you that you want to be more, well, fluid. You want to be able to pick your own setups. And that's what you're here for anyway. So for the first 2 weeks, though, I want you to kind of like use what you already learned. And what I gave you last month in April is a gold mine. I mean, there's so many things you can do with that information. You can trade just about every single trading day. There's something. Today, we allotted for Eurodollar and it didn't move. So no harm, no foul, just didn't move. But yes, you should be doing both entries. And just use the lowest leverage you can get. All we're trying to do is execute and work off of a plan. We're not trying to seize the amount of pips that would be rock star level. We're not trying to do any kind of scaling or anything like that. We're just looking for entry and taking profit at a logical level. Can I go over the Euro scalp again that I did yesterday? The one here? Billy, I think there's so many questions that's happened since that one, so I'm going to assume that's what you're talking about. But the dollar index, we outlined this level here yesterday, but a fair value gap. So if we hit that level and we're expecting it to fill, we always have a reasonable expectation that there's going to be a bounce. So that was the idea. As it hit this, I was already looking at this high, and I didn't believe that we would see a continuation up in euro. So once we poked our head above that, at the market, I sold short. And you can see I deleted some of the stuff, but there's those little things here. I'm going to take them off. I always forget them things. But the trade is, based on the fact that we weren't going to most likely see any upside as the dollar hit that level we outlined in the New York session live yesterday. So if we see support coming in the dollar, resistance should be coming in the form of the euro dollar. What better way of doing it? Selling above an old high. And there you go. Lots of that type of stuff happening in intraday. So you can really build your confidence up with turtle soup scenarios. I mean, look at this euro. Good grief. Can you imagine if if every day was like this in euro? I'd blow my brains out. Tuesday. I already did that question. They know they are. Alex says they know I'm teaching scalps and they're trying to keep it in their consolidations now. Oh man. Can we discuss today's Judas in Aussie? It closed an old daily gap. Leo. All right. I don't want to change the time frame. I want to keep it on these 15-minute time frames. So let's take a look at Aussie on a daily. I don't see a gap on the daily. Not today. I'm assuming you're probably thinking this little portion of this down candle, but that's already been balanced out because this candle's low. And again, I'm taking great liberty here, assuming that's what you're thinking of. The low comes in at 75.47 on this last up close candle, and this candle's high comes in at 75.51. So this actually went above this candle's low. So this has been balanced out. So that wouldn't be anything. It would be more appropriate to view that as a return back to the last up close, which would be, or the open rather, open at 75.57. Today's high, 75.56. There's only one pip away from that. The up close is more appropriate there than assuming this is a gap because it's not a gap. CAD is moving. It's nice to see something moving. Yeah, I don't think this is done. I think it's going up more, but to what level, I'm not sure. Let's go on a higher time frame, take a gander at it. Let's take a look at a weekly chart. We ain't looked at them in a while. Okay, we have a breaker. I ain't said that word in a long time. So we could see longer term on dollar CAD. I can get this thing out of the way. 138.10, 138 big figure. So about 100 pips more on the upside. It could potentially go. If you classic chart guys see a bull flag here, it also would overlap with that as well. If we look at the range defined on here, that also just takes us up to the 62% retracement level. So we're above equilibrium now. So 62% retracement level is essentially here. So 138.30. So there's an overlapping with the breaker as well still. The close on that candle comes in at 138.35. So yeah, 138.35 looks like it could be a doable. So about 130 pips or so more on the upside. Am I looking for the seasonal high in May? Around 110 would be sexy, says Fred. For the euro, I would like it to just give me the logical runs to these liquidity reference points. Once it gets to those, then I'll look at a little bit longer term. But right now, it just makes perfect sense for them to come down and take that. If it rallies from here, that doesn't do me any help. It doesn't provide any kind of insight to me because it makes more sense for me to see this go down for the sell side liquidity than to go up from here. And if this thing just bleeds lower later on and goes down to where I thought, I'm going to be upset. I'm literally going to punch him out of there today. No, I'm not going to do that. Will I be talking binary options? Hell to the no. I don't do anything with the binary options, no. I noticed they pop those things up all the time as my ads on YouTube, but I don't touch them. I don't know anything about them. I don't have any experience, and I don't want to trade them. Did you want us to see what you showed us in Aussie yesterday for Euro? Not sure what you mean by that, Mohammed. If I skip June's content to concentrate on short-term trading, will I be missing out, or is it okay to come back to it at a later time? You're definitely going to want to reference it because I pull a lot of information that's intra-market analysis based that helps with larger sustained price swings. And if we understand what they are on a higher time frame, it makes trading on the lower time frame and short-term trading far easier. So I don't think it's something you should skip. It's placed in a logical order of importance. So if you're going to take my advice, it's to go through the order of everything and don't skip anything. Why did I choose the euro instead of cable yesterday? It made sense for me that there was no movement upside on euro and they stretched it already. And while dollar hit that fair value gap, it's the perfect time of day for it to see what we saw with euro. I actually was only looking for about 10 pips really of movement, but as it broke down, I looked a little bit further out and thought that maybe we would see 108.90. So you can see my my limit orders were below that to get out, so it would have to go down to 108.87, and that would have been a run on this low here on these equal lows, but we couldn't find our way lower. Let's see. A lot of comments, a lot of repeats of the comments. Yeah, do me a favor, guys. If you made a comment, if you posted it twice, kind of leave it at that. Because I see a lot of them are like 3 and 4 times of the same stuff. And it just pushes other questions that I didn't see up. Will you go into detail about time-related stops, otherwise known AKA, if there is no movement to a specific hour, we collapse the trade like today? You're going to learn the protocols that will cause you to want to collapse the trade. Yes, there's conditions that I use that pretty much are consistent. There's nothing that, you're not going to be able to have a hard time following as a basis to kill your own trade. Does this scout method work on stocks and indices? There's some overlap, yes, but the specific times and characteristics are heavily slanted for Forex. When I teach you the day trading of the S&P 500 and bonds, you'll see they're really simple. I mean, there's far more things in Forex to be drawing your attention to than it is for the stock indices and for bonds. But I had to actually do teachings from my other screens, so I have to come up with a way of doing that because I'm not linking my live sessions through that computer. I'm not doing any of that, so I might have to do a lot of that work with pre-recorded session. Pepperstone. I'm assuming that Ben is one that has no gaps or no Sunday candle, but with dollar index. I think it's probably what you respond. If you are, I appreciate that. Just toss that onto the forum if you don't mind, because I'm sure that question is going to repeat. This custom time axis will plot below your chart your local time, GMT, and axis. I'm sorry, Asian and European sessions. It is all the news around the world pertaining to the markets. It also has a global cursor for multiple charts. The cost is $49 with lifetime license. It has helped me. What? It has helped me with the time difference. I thought it might be useful to some of the members. He shared a link, but I'll just encourage you through the recording because I know you already left, Stephen. But just post it on the forum and we'll take a look at it. I'm not promoting it because I don't know what it is, but I'll take a look at whatever you send in terms of a link. FX Pro has no Sunday candle and dollar index. Thank you, Frenchie. Can you do me a favor? Can you put that on a post so people can actually go to a link? I'd appreciate that. Can you ignore the news with these setups? And can you ignore the news? You have to repeat. The news is actually going to be a driver many times, but today there's been an absence of any kind of news, and you can see that everybody else is pretty much doing the same thing, sleeping in. I do not like other forums because they allow others to talk smack, but they would love for me to put my content back on their forum, though. So no, I'm not giving them income for traffic. That's why I'm taking the free tutorial stuff off my website and revamping it, adding a couple little things in here to justify why I'm taking away the forum that I stupidly, I don't even know why I didn't put it up here. How do I know about IPTA? That is a discussion that won't be talked about here, but I've given you exercises and samplings, if you will, of how I came to understand what it is. Are we supposed to? Yeah. That question's like 20 times in here. You're supposed to do both. When we use the case studies, you need to be entering at the 0 GMT open or on a limit basis, or as it moves away from that opening price relative to the time or direction you're looking for. I'm watching the stock market. I want to, like I said, I'd rather see it rally up into July. It makes sense for it to seasonally make a high. So the first 2 weeks of July, I'm really going to be paying more attention to the equity market then. So I don't care what it's doing, but I will be really caring a lot about the equities about the second week of June. We'll be looking at them at least once or twice a week. I'm not finding trading as fun as I did when I was younger. It's a little bit more frustrating now because the markets are just, they're not moving enough. There's just not enough movement. And I like a fast market. I like a market that's, gyrating a lot. And it doesn't have to be direction based, like it's working one side or the other. It could just be going all over the place, up and down, but bigger ranges, and we're not seeing it. We've seen a compression in volatility. And you just see 1 or 2 days where it moves a lot and then it doesn't do anything else. So to answer your question, it's not fun for me right now. It's been fun in the past. It'll be fun again, but no, right now I'm not enjoying myself. No, not at all. I'm enjoying teaching. I like that because I get to relive everything I've done before, but nonetheless, no, there's nothing in terms of fun right now about these markets. When will you be telling us the times of the central bank dealers range for Aussie, Yen, and Kiwi? You have all that stuff in one slide, if I'm not mistaken, I'm not sure. I got to take a look at my notes where it's in there, but it's in this month's content. It's all explained just in one slide. Are we supposed to be doing those entries? I saw your question, Jacob. How do we use the Sunday gap to size the proper size percentage-wise for a swing trade? For example, 100%, 75%, 50% stop from the entry gap size. I don't know how to answer that question because I don't know what you're asking in specific. How do we use the Sunday gap to size the proper? Okay, I'm assuming you're trying to trade on Sunday, and if you are, don't. But let me think about what you're asking here, because I'm sure you probably are wanting to retype it now, so I'm going to try to save you the time doing it. Assuming that you're looking for a stop, and how much do you use because you don't want to get clipped because of the gap on Sunday? That one was on dollar. Because of the consolidation we're in right now, I didn't expect much upside. So the stop doesn't have to be a full 5-day average daily range, but that would be used if you're a position trader or a swing trader. And if this was going to be a longer term entry, which we didn't outline, but I still want you to execute on that because it gives you experience doing it. But you can use 50% of the 5-day average daily range. Okay, it's a nice go-to. And if that overlaps with what we have taught in the past about power 3 on the daily range, if the average daily range is 100 pips, 1/3 of that is essentially 33 pips. So if you're looking for a move up above the opening price, about 33 pips above is generally the ideal scenario. After you rally, though. So if you're looking to go sell and short, you want to see some measure of movement above the opening price. And in that movement up, we want to be selling at a logical area of premium, which would be either a bearish order block running all high, as we saw here today in London, excuse me, and then adding that 33 pips to that, because the likelihood of the opening price seeing 60 to 70 pips or so up and then making the high today, while it's possible, it's not likely, even with the 0 GMT start. What you're actually doing is the point, and I didn't see this as a question, I'm just tossing it out there because I'm sure probably some of you are wondering, but just didn't build it into a question. What's the benefit of doing this exercise of getting in at the opening at 0 GMT versus waiting for a rally if we're bearish to sell into? The difference is you're going to see why it's important to, number one, trade in the opposite direction of where you think the market's going to go. And it's also forcing you to use the information you've already learned. PD arrays, premium to discount. That model is repeating itself all the time in my trades. So if that's not in your trades, you aren't going to have similar results, and you're going to be widely different from the expected outcome. You may get trades that pan out once in a while, but you won't get consistency, and you won't see the delivery of the high and low as accurately as you will if you do the stuff I'm teaching you. I like the gaps intraday. I have noticed that your daily highs and lows are lining up with them. Is this one of the secret sauce that you promised? Well, that's one of the observations that you'll see by doing it, yes. How many daily highs and lows have you seen? And we've mentioned, and it comes in the form of the gap. That's one of the reasons what we're doing this stuff for. Even if you're not going to be a scalper or a day trader, it's important to know where these exist, because your trade may come to a terminus at that level. So if we see a gap that's like 30 pips above us and we have a target of about 33 pips from us, I'm going to elect to go right to the gap and nothing more. There may be a little bit more going into that extra 5 pips that everybody else wants to hold out for perfection. I'm not worrying about that. I'm going to go out where the logical PD is, and you'll see it. And as you're obviously noted here, yes, there's many times that the fair value gaps intraday will cause an overlap for the daily high or low to form. But there's other things you have to line up with it, but generally that's a usual fingerprint. And they say you can't pick daily highs and lows. All right, if we that same question keeps coming up. Seasonally, dollar index is bullish in May. The trade that I outlined last night has nothing to do with seasonal tendencies at all, liquidity based. Chase says he caught that high. Thank you for your concerns about my son, by the way. There's been lots of that. I just don't want to fill the video up with it. I only had one entry, yes. I only did the entry you saw me collapse earlier today at the beginning of the session. Yes, you should be taking 2 entries and using the smallest leverage you can do. So about, what, 1 mini? You want each. I ain't never heard of a flat mouse pattern. Let's take one more quick look at Aussie and CAD. Not that one. Yeah. Cable. Nothing. Euro pound. Nothing. Yeah. As soon as I close the session, they'll probably run euro dollar down 40 pips. Alright. Am I going to teach breaker day trades or breaker scalps? That's pretty much self-explanatory because they're your PD arrays that you look for to trade off of, universal to time. Are we ever going to get a webcam video or session with you, or do you plan to stay anonymous? I've played around this idea, but I don't think I'm going to be doing any of that because the folks that like to make fun, they'll just take those images and turn them into something else. There's only been 3 pictures of me. It's actually been real pictures of me. The rest are family members, and they have nothing to do with me. All right, Oanda server is GMT +3. Safe to assume their T-bonds, etc., are useful for analysis. I don't have any experience with that, Konstantinos. I'm sorry if I brutalized your name, but I don't have any experience of looking at that with that. I found this setup often fails in large consolidations. Is there more criteria to be taught? Yes. There's a lot more secret sauce stuff. A lot of comments. I don't know what you're talking about, Daniel. Have I heard anything from Ethereum and mining rig? And don't know what you're talking about there. Options are going to be in the month of June. And no, I don't do all of that. I don't do any of the exotic, strangles and straddles and spreads and all that stuff. Well, I do one thing with a spread, but generally it's a long call or long put. You don't need anything more than that. These guys get out there, unless you're going to be a career writer of options, and most of the money's being made by that. But I'm a directional biased trader, so I'm looking for direction. Yeah, there's nothing going on in the market right now, Vinoth, so I'm just giving everybody an opportunity to ask anything that has an alignment with what was outlined for today. Can a scalp or day trade turn into a swing trade? Yes. That was basically the heart of lesson 8 last month, and we'll build into more criteria that you can do that with these lessons this month. Can we do another chart rather than Eurodollar, which is a wind up right now? Can we do another chart? Well, there's no setup for anything right now because the markets are on hold. Nothing's really happening. Well, we might see the dollar run up here. Get this off. We might get it to run up a little bit more. CAD certainly wants to spread its wings. This Eurodollar may end up becoming a late New York rollover where it just dribbles down. So I don't have an entry again in here, but I'll be watching to see if it does anything going lower. I don't think we're going to see a big run up. Simply nothing pushing price around today. I appreciate that, LC. Pepperstone has dollar index, and it's a version for Mac too, so that's cool. Can you go over the daily swing high on cable? it looks identical to Aussie. Can I go over the daily swing high on cable? This pair here, for the life of me, I believe, is going to want to take this and close that little portion in right there. And it's not a significant amount, but I think that's where we're going to look to see price on the cable. Let me say Comcast. I don't know why I was thinking Comcast. 3140, I think that's where cable will probably want to reach up into. So ideally, what we want to see is market rally up here. I don't see this. I don't see this high, another high, and then reject and sell off. I don't see that here yet. It doesn't mean it can't form today and give us a weekly run lower, but I just think it's more apt to go to 130, 140 longer term. So I want to be more focused on that scenario unfolding than trying to capture a high. Vantage FX and Go Markets have US dollar index, but it's a little different price to FX LTD. Thank you for that, Anton. But you can probably appreciate why I would not want to do that, because I already get a lot of questions. My data doesn't look like yours. It won't, regardless of where you're trading. Who showed me initially how smart money really works? Well, my first introduction was through Larry Williams with the Commitment to Trades report, and then I found out there's a fallacy in following it just blindly. So I already came into trading because of him with the notion there was people out there that knew more than I am, or knew more than I do then. And because of my attraction for people trading in the markets in America Online back in the 90s was kind of like the thing. So they had message boards on the internet, and I ended up going into one of the message boards. Some guy was doing a stock picking thing, and I started naming stocks, and it got pretty, I got a lot of following, let's put it that way. And then everyone asked if I did anything other than stocks, and I was like, well, I started as a commodity trader. So I started talking about commodities and specific moves in that market, and I started getting popular there. And then I focused on the S&P and bond, and because of that gathering, I got a collection of people and made my own room. And while I had my room, and I would do occasional posts to get more people coming into the room, and finally got up to 1,000 people in my private room, I was approached by a gentleman that emailed me and asked if I could be willing to sit with him, and he would be willing to travel to where I live on the East Coast. And I was like, well, I'm not sure what your interest would be with me, but you know, what are you getting at? He said, well, I would like to meet with you and discuss some potential opportunities. I was like, well, what kind of opportunities? Because at the time, I was comfortable with what I was doing. But long and short of it is, but we made an arrangement. We met in a undisclosed place, and we met with another gentleman that was with him. There was two guys that came, and he said they have been very impressed by the level of consistency I have with the equities and the other market calls, and asked if I was working with someone. And I was like, no, I'm just homegrown. I just did all this stuff on my own. And he said, well, look, you know, we have an opportunity for you if you'd be interested in listening to it. And I was like, okay, sure. So I'm thinking, you know, they want me to be like an analyst, you know, that type of thing, because I'm certainly not going to try to trade other people's money, because at the time I was too stressed out doing my own trading. You know, there was a lot of risk and a lot of leverage every time I took a trade. So I already knew at that moment, which later changed, that I didn't want to touch other people's money. But if I was going to be like an analyst, that'd be great, because I saw people doing those types of things. And at the time, I really wanted to be in the, like the magazines, like Futures Magazine. They didn't have like Trader Magazine back then, but Futures Magazine was like the magazine. And I wanted to have my name in there because of ego and pomp. And I thought that's what these guys were going to be doing. They're going to like, hey, look, you know, they're going to asked me to provide like an article once a month, and I've been all for that. I've been great. But they started talking to me about things that would be made available to me in teaching, and would I be interested in going to basically work with them. And I wasn't really sure what they were outlining until our second interview meeting. And they gave me some things to look at. It wasn't really highly detailed, and it just kind of like quizzing me how I thought about things, like what was my mindset about certain things. And a lot of it had nothing to do with trading. Like what's my opinion of certain things in the world would have no link to trading whatsoever. It's almost similar to, and I'm not sure if there's any of you that are like police officers, but it's like a psychological evaluation. That was really like the question. It was like a questionnaire like that, and they gave me that, and they said, look, bring this back with you when we meet again, and I'll send you an email, and we'll meet at that time, and we'll meet at the same place. I was like, okay, sure. So literally, I went home and I went through it real quick. It's about 32, 33 pages of questions, and I just basically had to make a choice of how I felt about that condition or that thought process about whatever it is that they were asking on individual questions. And I had to give it back to them, and I gave it to them. We had another interview that was a little bit over an hour, and they said, look, we're going to take a look at your responses here, and we'll get back to you again, and we'll have another interview. I was like, okay, sure. And at this point, honestly, I really wasn't interested. I was thinking to myself, what are these people doing? Like, I didn't feel comfortable because they didn't give me any they didn't give me a lot of information in that second one beyond the actual questions of the questionnaire. So anyway, the third interview, they basically outlined how they would make more information about trading available to me. And if I'd be interested in coming on board and be trained, it'd be a formal training. And that I would be, working with a lot of the folks that you wouldn't hear about or know about, but the things they know, I'd have to be trained and go through those types of things. So naturally, I was thinking, wow, I'm going to basically know what the commercials know. And it's not that. It was completely different from that. Like commercials, they're just like Hershey. They're large, big users of cocoa. So they have real supply and demand, people tracking the supply and demand factors around cocoa. Because if they have to use a ton of it all the time daily to make their candies and their products, they have to keep track of that. And in commodities, there's a real supply and demand factor. Every other asset class, it's all artificial supply and demand. It's engineered. It's manipulated. Not to say that commodity prices aren't manipulated to a certain degree, because they are, but the third interview was more or less like they liked my responses, but they had a lot of questions about what lengths would I be willing to go, and what threshold would I go to where I would I be willing to move. And at the time, I really wasn't willing to move. I'm a homebody. I like to be in one place. I don't like to be bouncing around. And they were asking me, look, you'd have to move a lot and work with other people too. So it would be not just me learning it. It would be me learning it, and then I would be also teaching other people, training other people. And eventually all these things would make me move up larger into more influence about what the markets would be doing. So I don't have anything more I can say about it here, but if you're asking like who they are and what their names are, I'm not going to do that. I'm not really supposed to be talking about it at all, to be quite honest with you. But all the things that I learned about the manipulation aspect of the marketplace, obviously that's always been a tinfoil hat topic for everyone out there. If you ever traded right away, you already think there's somebody out there to get you. But it's not retail anything. It's not like somebody I can say, hey, look, read this because this will get you close to it. It's nothing like that. And if you see, like if you go on YouTube, okay, you look up anything market maker, obviously my stuff will pop up, but then you have all these other guys that will say, what the market maker never wants you to learn, or what they'll never teach you about what the market maker does. There's different degrees of making a market. I mean, obviously, if you're a writer for options, you could be a market maker in that aspect. If you are if you're at a brokerage firm, okay, and you're providing that liquidity, yeah, you're a market maker, but that's not what I'm talking about. What I'm talking about is starts all the way at the top and why the price is manipulated from that point. See, all these other people can come out with courses, and they can come out with workshops and travel all around the world and be real nice and polite and talk about how, it's this and it's that, and it's nothing like that at all. It's nothing like that. There literally is a move on other people's money, and that's what it is. It's not the retail folks, it's the large funds. And they have a very systematic, systematic and generic approach to how it's done. And they don't have a lot of variables in it, but when you understand them, they repeat over and over and over again. So years ago, I took it upon myself to ask the general populace through very selective means if I could get a group of people trained to do this as well. And I did it for a fee, obviously. And that information is pretty much being pumped all over the internet, and it's incomplete as well. It has a lot of different stuff that I don't even use anymore. And they added things to it, all these other indicators that I didn't use back then. But the idea of what smart money really does, first of all, there's no way I could have arrived at these types of things on my own. I had a lot of preconceived notions about why the market does what it does, but I couldn't put my finger on exactly how it could be seen and expected to see it unfold again in the future. Like I always see, like anything else, everything's perfect in hindsight. But what I started looking at is because I journaled like a madman. I mean, I literally kept journals every single trading day. Whether I did a trade or didn't do a trade, I was journaling all the time. Because my opinion of development is you have to have some measure of where you came from. And if you don't have that, you don't know if you're going in the right direction. So because I was obsessive about learning this stuff, spending half of a 24-hour day always being immersed in it, reading it, and listening to it, and cassette tapes. When I was doing a vending route, I had a headset, a Walkman, and I would listen to, guys talking about trading, and I was constantly feeding myself. And a lot of it was garbage, but I was always plugged into the marketplace. So I'm very, very highly selective about what I was listening to. I didn't watch TV. I didn't do any kind of sports anymore. I worked out, and I just consumed the market stuff, data, looked at all kinds of asset classes, tried to figure out everything I could possibly figure out. But what I learned from meeting these two gentlemen and the things they taught, it filled in a lot of the gaps when I went back to my old stuff. And while they did not say, this is a breaker, this is a mitigation block, okay, those terms are created by me. I created that so that way I can talk about the idea that I see in charts, and I'm not in any way, shape, or form in trouble for doing that. That's why I've made it pretty much, that's public knowledge. But that stuff doesn't exist in other things. And while at quick glance, if you see a rectangle on my chart, they right away naturally assume it's supply and demand, and I've done something with Sam's stuff over at Online Trade Academy. I've watched maybe 7 videos of his stuff. And like I said, if anybody has really studied my work, you can see it's not supply and demand. But because there's a box that may be on my chart, right away they're going to assume that it's that. And it's nothing like that. You'll learn, if you haven't already learned, the storyline behind why price is moving. That's the missing element in everybody else's discipline. That's why the breakers are good. That's why when you understand when price comes back to a specific block, if it's mitigation, why is it going to be resistance? Or why is it going to be support? Because there's a storyline behind it. Over here, for instance, the reason why I did the scalp yesterday, I'm going to tell you why I viewed this as a smart money idea. The range was already going to be capped because of the likelihood of that dollar index coming down to that fair value gap. If those want to come down here, rebalance that out. It only wants to come down here to close that in, not to go lower. It wants to come down here to close that in and then likely move up. That's all I need to frame a sell. So what's the way I would look to sell? Everybody else that wants to sell short, they're already positioned here. They came all the way back up to take them. So I'm going to sell as that price goes above that. I learned that by looking at what I learned in concept of how the markets are manipulated and how they're priced and certain things around time of day. I went back and looked at my charts where I lost money, and I saw very quickly where I was doing the opposite. Like I would be looking to go long up in here. Like I thought early as an early trader, this move above this high, any movement in here in consolidation, that's going to be a bull flag. It's going to keep going. And I would be getting long here. So I would be buying the highs. It changed that whole way of thinking when I look back at my own trades. And the real science behind what makes me ICT or Inner Circle Trader is I look at the storyline in price, what they did, and I justify in my own terms why they did it. They came back up to take these stops to go lower. Why? Because it went down to a fair value gap that should provide support in here on the dollar index. And I'm not expecting a big move because we're in consolidation. So what have I done there? I've created a criteria in concept form where the dollar should be forming bullishness or support at a time when the price of your dollar is rallying above an old high. This rally is going to be suspect. They're coming back there to take those stops. The likelihood of being a big up range, not likely. So all these classifications and conditions being met around a specific time of the day, well, we've already seen this type of day, or time of day rather, 14:15. So that's 9:15 in the morning, New York time, and you're expected a small range day. You're going to possibly see what? A New York reversal. New York reversal unfolds. And you can see it was only one pip above this high and really, really nice entry. Everything that I've done was to go back in price and figure out what that manipulation was and why would they want to knock out that individual, or why would they want to take price down to a specific level. What's that storyline? See, no one teaches that. They'll always talk about it in hindsight, but no one has been able to put in the work to outline what that storyline is. Okay, if you look at Steve Morrow's business, what he's done with my information, he's had a lot of indicators and crap to it, but he talks about just the simple failure swings at the highs and the lows in London. Okay, sometimes it doesn't create that, and that's why people that use that stuff they find on the internet, they don't always get good setups. Sometimes they're going to sell short and it runs up one more time and goes into a breaker, or it goes in and fills in a void, or it closes a gap. See, he didn't learn that. I kept all that stuff from him. I kept it from everyone. The storyline is there has to be a movement in price to go to a rebalancing point. That's what I liked about Chris Lori, because he's real close to it, but he doesn't have it. He understands imbalances, but if you look at what he teaches, he doesn't teach everything that I taught just in the Sniper series. If he incorporated that with what he does, he'd probably do a lot better. Secondly, there's another guy, Steve. Is it Stephen Cole? Steve Cole? Martin Cole. Yeah, Martin Cole. He has information supposedly that's the market maker this and the market maker that. Again, watered down version of a PDF file from 2001. And again, he talks about the box, what's inside the box. Okay. All that is a watered down version of a conversation I had referring to how in consolidations, we want to know what the market makers are going to do inside that range. And the manipulation is, if we're bullish, we want to see that manipulation move out of that box lower. That's the Judas swing. I didn't call it a Judas swing. I just said we want to see a swing out of that box. Whatever that box is going to be, well, guess what? There's several instances throughout the 24-hour trading day where you can see a potential Judas swing. One of them is London lunch. One of them is London close. One of them is London open. And the other is the new day. New York is generally always a reversal, or it's a continuation. The way I break down price with all these storyline ideas is it gives you context that doesn't appear in any other discipline. So the greatest work I've had, and what makes my whole approach to trading unique is that I have always gone into price to try to justify what it is that's going on, because I don't see buyers and sellers. That's what the market teaches us. If you listen to supply and demand, the guy says he learned this by looking at the stack of tickets, how many buy orders and how many sell orders. He didn't clear for everybody, so that's nonsense by itself. Right away, that's nonsense. That's like saying you know the total volume, okay, in Forex because your broker shows you their volume. That doesn't equal the same amount of the total volume of that buying or selling, and you're not going to get real accurate volume for Forex because there's no local exchange, there's no centralized exchange. So again, I mean, we could talk about this all day long, and it's either going to bore you or you're going to be like, well, I didn't know that. I mean, we've said it enough. But the point is I don't want to give you the impression that I'm going to tell you their names, okay, and how you're going to meet them and all that business. Because when I walked away from it, I was scared, and I was nervous when I first put my first video up. I was reminding myself out loud, I'm only going to teach this much. I'm only going to say this much. But what happened was I got very, very good feedback, which I knew it would. But the feedback became like a reliving of the moment that I got. And I got addicted to that feeling of, I know what that feeling is for them. And I wanted to relive it. And if you go back and listen to some of my videos, I actually got emotional sometimes. And because I know what it's like. I know exactly what it's like for all of you. I know it's like when you're struggling. I know what it's like when you're getting right on the cusp of success. And I know what it's like when you get it and you finally have it. And there's nothing I can do to take it back from you, and nothing anyone else is going to say to change your mind about it. You'll know it. You know it. So it's like, London creating the high, the low of the day. I mean, you know it now. If the directional bias is, one-sided, you know what's going to happen between 2 o'clock and 4 o'clock in the morning New York time. It's a dead ringer. Not every day is going to do it, but you know that the likelihood of that unfolding, it's there. So when I first started talking about the deviations on central bank dealers range, right away people were trying to apply it, and because they don't have all the conditions that you would look for to apply it, oh, this is crap, it doesn't work. No, you don't have every piece of it. If I give you, 4 pieces of a jigsaw puzzle, the likelihood of you knowing what the picture is, it's not likely you're going to know what it is. So it's reasonable to assume you're not going to get the outcome that you probably thought. So yeah, I feel comfortable with having central bank dealers range on the YouTube channel because it gives them enough that they can find it in the charts sometimes and say, wow, look how precise that was. I wish I could have done that trade. See, that's what you're learning. You're learning all those things that leads to why you pay attention to the central bank dealers range that day and why you go up 1 or 2 standard deviations. I put it out there to let people know this is how I found it. I did certain things and studied the way Price did these things, and it doesn't make me a genius. It just makes me an obsessive, compulsive person. I wasn't letting go of it until I figured it out. And it took a long time for me to come to terms with, I wanted it to be perfect like every one of you. Like I needed it to be every single day. I needed to know what the high and the low was every single day. And I was only getting like 2 or 3 times a week where I would nail the high or low. And it came quickly that I realized that I didn't have to have it every single day because I knew there was repeating conditions that said, you know what, it may unfold, but it's not as highly probable as these other conditions I've noticed. And that's what makes this hard. My stuff is expensive. It takes a lot of time, a lot of energy, and a lot of effort. But when you study it all, you're going to get freaky results, man. I mean, ridiculous accuracy. And you've seen some of it already. So I went a long way around who taught me this, the way smart money really works, but it was basically the information that these 2 gentlemen provided to me by way of something I can't tell you or teach you or show you because it's not for the general populace to know. And I signed something just like you signed something that I can't divulge that. So what I did was I bridged all that and I created what you're learning. And you got about 75% of it now. We're coming to the end of it all. But by the time we get through completed in August, I don't have anything else to give. There won't be anything else to teach, and I'm done. It'll satisfy that promise I made that if I was successful, I would make it available to other people. And I'm doing that. So don't think for a minute that I'm ever holding something secret back that you need to make it work. Because everything that I'm teaching you in this entire course, all 12 months of the content, that's everything I know and how I use it and when I use it. So there's no secret series of videos that's going to come out. There's no upsell. Hey, if you really want to know that, I'm done. There's nothing else I'm going to teach you, and there's nothing else you'll ever need to learn. You'll never need to buy another book. You'll never need to look at another workshop or video, another teacher. You'll know everything you need to know. You'll know every criteria to use it in and when not to use any of it. And that's a complete method of trading. I like Chris Lori because he's got a lot of simple things about price that make sense because it's very close to what I do. But if I was going to be highly critical, just about every one of them except for closing a void, they all have subtle things that I would like to add to it. And we've exchanged ideas and conversation on the phone, or and when we did dual webinars together, at the end, I would go over certain things and we would compare ideas about what we would interpret price at specific levels and why this and why that. But apart from him, nobody else I don't think should be listened to in the foreign exchange market because it's all fluff. It's leading you the other direction. While there may be some momentary response off of price based on something that didn't even put that person in the trade with. It just happened to be an overlap where it worked, like pivots. Pivots sometimes work and sometimes they don't. But we always see them in books where they always call the low and the high of the day. That's not always the case. There's certain things that I teach that are just about generic to the degree where you can expect it almost daily. And it's very, very accurate. It's not like it comes in once in a while. It's a daily phenomenon. Every single day, a high or a low forms in London in one pair or another. And if you go back and look at the analysis that leads you to a directional bias, it's pretty much something you can trade every single day. But I don't like to do that. I'd rather be a selective specialist. And I like Euro and cable. I only offer dollar CAD and Aussie dollar as a means of just providing something else to prove that the stuff works in other pairs. I collapsed the euro dollar trade because it hasn't moved. We didn't see a continuation on the dollar index, and it's yet to move. So it's better to be on the sidelines now. Nothing's moving. Would you add the free tutorial link stuff to this forum if taken down from your website? Let me rephrase that, Matt. I'm taking them down individually and replacing them immediately. So there won't be a point where the videos are gone from my forum. I'm just having Cody go through them and remove the beginning intros and adding a couple different things in the production, and then replacing it back on the web, on my forum. Well, not my forum, my website. I'm not taking anything down to remove it entirely. I'm just letting you know I'm going to be removing the website that's promoted in one. I think, if I'm not mistaken, in one of the series is my best one, in my opinion. Sniper shouldn't have never had that forum advertised in it. Does IPTA use daily action to eventually hit 20, 40, and 60-day data ranges? Yes, David. If news outcome known in advance by smart money. Okay. Is the news outcome known in advance by smart money? Let me say it like this. There are people that know what the data releases are going to say before the fact, yes. Are they smart money? No. They're informed money because they know what the numbers are going to be. The difference between informed money and smart money is smart money will manipulate price around that news event. So, I mean, give you an example. You look at a specific report that comes out, and if you go into Forex Factory and you click on the report little folder, it tells you the basic idea of how to use the interpret the price expectation based on the numbers released. If this number is greater or higher, this is positive for the currency. Well, the release comes out. That news should be positive for the currency. And what does it do? It goes the other direction. That's smart money. They manipulate the thought processes because of everyone's interpretation of fundamentals. That's not the secret to it. Now, it's the secret to long-term investing, yes. But I'm not in Forex for long-term investing. I'm in here for velocity. I'm going to put my money at work and pull it back out. So I'm using the model of smart money manipulating price around news events, because what you normally expect to see happen generally isn't what happens. And it's amazing. It's almost like you can just do the opposite of what you expect to see and then watch for it to unfold. And that manipulation that takes place, while it would be bullish for a currency if we see a specific number come out in a high impact or medium impact news, and if that release comes out and yes, it's at a number or a data point that provides what would be reasonably expected bullishness, if I see a rally up to a premium PD array, I'm selling short in that situation many times. That's the manipulation side of it. So I know what you're asking in regards to does smart money know what the news is? Smart money doesn't care what the news is. Smart money, when I refer to it, is the bank that pushes price around and resets price, because they're making money off of unsettling the large funds. If they can make a run on that liquidity pool, they absorb that, and also they can facilitate their own trade. So hopefully I've answered your question, but they don't need to know what the news is. News doesn't move price. Psychology does. I have started to become very good at trading. Do you find it scary when your win rate is really high? I think I've talked about this in the mentorship and another time in our free YouTube videos, but you definitely want to avoid that John Wayne, when you start strutting around your house thinking to yourself, man, I got this stuff licked. That's usually when you're about to have a losing streak, and it's because you feel confident, but then when you have one loss that's reasonable and it's expected, and maybe a second loss that's reasonable and you should expect it, you flip out. And if you identify yourself with, I'm Mr. Perfect, you quickly want to try to get that back, because if you get it back, then you can tell yourself verbally and out loud, yeah, I took a loss, but I got it right back right away, so I'm still awesome. So yes, you need to be aware of what you're feeling. That's why before you take a trade, you want to write down how you feel. Because you're not writing it down just to have it as a log to, oh yeah, that day I was happy or that day I was depressed. What you're doing is you're making a mental mile marker for reflection. Like, I know I'm going into this trade right now, I'm pissed off. I'm pissed off because I got to drive 10 hours, tomorrow, because I don't want to get on an airplane. I'm mad. I'm angry. So I'm going to make that entry in my journal. So right away, that should be a reminder, hey, look, I'm going to probably be doing things emotionally in the marketplace. So if I take a loss, be done with the market then. Don't take another trade. So that's why the benefit of having that in your journal is there. Now, in relationship to how, if you were feeling, I feel good today, I feel confident today, or I feel like I'm winning, then you're really elated. So when you are in a winning trade and you feel the impulse to say, like, I want to hold for a little bit more, this is going to turn into a bigger trade, reflect back on how you started the day. If you feel like you're Mr. Perfect and everything's awesome, you want to close the trade, because you're already getting that King Kong feeling. And believe me, that is such a true statement when Larry Williams said it. As soon as you pull out the calculator and start thinking about how much more you're going to make on the trade, get out. And that served me well. It's like a gospel now for me. I listen to it in my internal dialogue all the time. So yes, to answer your question, Daniel, it should be scary for you when your win rate goes really, really high, because you know what's going to happen eventually. You're going to have a loss. And how you deal with that loss is going to be really a direct correlation to how you're going to be a trader for the next month or and a half, because you're probably going to lose your account. You're going to think you're too high and mighty as a trader, and you won't accept one loss because you're going to try to hurry and get it back to prove that you are that rock star, and it messes you up. And you parlay that 1 or 2 losses into a series of them, and you know what the outcome is. You're not going to keep the same risk model. You're not going to double down. You're not going to reduce. Okay, you're going to double up. You're going to increase the leverage because you want to get it back. Bruised ego syndrome is the worst scenario for men in trading. We don't care if we take a loss as long as we get it back the same day. After the mentorship, do we still have a chance to learn from you? You were saying that you will have a signal service or something like that. Is this the case? I don't believe I'm going to be doing a signal service, no. I do that to mess with the trolls, but I have committed once a week to you guys. I think that's fair. My wife and my family would have no problem allowing me to put 15 or 20 minutes into a weekly, just to touch base with everybody, give my opinion about what the markets are doing. I could do that in a real quick, short 15-minute, 20-minute video on a weekend, like on a Saturday, and say, hey, look, I'm really watching this week. That way you can use the information you learn in the mentorship. But I don't want to make a promise to you anything more than that. But I think once a week is fair. You guys will have a lot of information. You'll be doing your own thing. But I'll still operate through the forum. I'm confused on ADR. Do we use the whole range for stop loss or 50%? If you're doing a swing trade or a position trade and you think that the position is more likely to move off of a higher time frame, longer term, you enter this time of day with the full 5-day average daily range as your stop loss. And it makes it real easy. You don't have to be doing anything scientific, no measurements or anything like that. You just simply get the 5-day average daily range if you're buying, and you subtract that from the opening price, or 10 or 20 pips below if you're going to be buying on limit, and place your 5-day average daily range stop loss below that, and you just let it go. If you're not going to be using a higher time frame swing or position trading entry, you just take a 50% of the last 5 days average daily range, and that's a really good general rule of thumb. And if you can provide support with all the things you learned from last month and this month's content, you're going to find that your stop loss can be a little bit smaller than that. Some of these questions are really, really, really old, and you were probably responding to something I said, and I can't pull that up to figure out what you were saying. I don't ever use the Euro index now. Yes, I want the liquidity to come back too. Am I staying the whole New York session? No, I'm going to be closing here in 2 minutes because the video is now approaching 2 hours. A lot of repeats, questions. Yes, this is what we're going to be doing. When we complete this month, apart from any little subtle things that I teach you in August, there will only be applications of everything that I've taught. So anytime we go about discussing the marketplace, we'll be framing on our daily chart index. So you'll have a daily chart and a lower time frame chart. It may be a 4-hour, maybe a 1-hour, maybe a 15-minute time frame, depending upon what the conditions is in the marketplace at that time. And I'll tell you what side of the marketplace I'm focusing on. If it's going to be a short-term swing or position, if those conditions are there, you'll always see that in my chart, and you'll have the levels that I'm watching in the PD array. So while there are other PD arrays to work off of, when I do my chart index charts with you, the ones I'm focusing on that I think is the largest draw on price, like I do now, that will still be there. I'm not going to address the chart of every single PD array because then it becomes too much. But I'm telling you why I believe price is going to go to that PD array, and that's the basis of why you'll know why I think the market's going to go either on one-shot, one-kill basis, if it's just a day trade, if it's going to be a swing trade, or if it's setting up for a position trade. So once we get through this content of this month, everything we frame will have to have a classification because there's nothing new in terms of the teachings that you'll have in the mentorship after this month, just the application thereof. Is there financial news outcome known in advance by smart money? I think I already answered that. Yes, I'll show you my my trading desk and all the monitors and all that stuff and how I do it. The Bat Cave. I'm not sure if you asked the question, Gerald, but I see your comment about wanting to leave. Bitcoin, I do not want to touch it. Don't care about it. Wouldn't trust it. You can fly all the way to the moon, I could care less. Penny stocks do that too, and they crash. Will you be rich with these concepts? Well, I don't know. Rich is basically a term that everyone else will have a different definition for. But I can tell you, you'll be richly and blessed because of the insights that it gives you and how you use it. Obviously, you know, if you use wisdom in the right context, you know, it's going to have a positive outcome. If you put money to that as an investment, I don't know. You know, I don't know how much you can make, but if you don't do the right things, you can lose a lot. Yes, I'm teaching Flout this month. Active trades has dollar index and tight spreads. Thank you, Jacob. Should we use Forex Ltd for analysis and transfer the ideas to our live accounts for execution? Well, I don't tell you to do live executions. I tell you to work in Forex Ltd. That's how I have to operate in the States to stay within the regulations set forth by CFTC. So you'll only hear me ever refer to demo trades. I'm not licensed to give trade advice. I'm only talking about things in a demo account where you can't make money and you can't lose money. But I'm certain some of you will see repeating phenomenon that will bolster your confidence to make a segue into live accounts. You decide when you're going to do that on your own. I never tell you that because the risks are obviously all yours just as well as the wins are. And I don't take credit for either one of them. I can see you, Andreas, so I'm not sure if you said something other than that one. Yeah, no signal service. I'm not doing that. You guys don't. You ain't going to need a signal service. You're all going to be starting your own signal services. Yes, I'm going to teach how I do all my compounding when I'm working with an account for real aggressive growth. It works nice with trade talking software. When transitioning into a live account in the future, what do you advise as a reasonable amount to start with? The lowest amount you can start with. Whatever the minimum is that you can start with for live funds, use that. And I mean this, okay? Because if you can't grow a $1,000 live account, you sure as hell are not going to grow a $50,000 live account. You'll see when you trade with live money, even if it's a small account, it's going to many times cause a great deal of it's going to unnerve you. It's going to stress you out because you won't have that feeling of, well, I'm protected because it's a demo. I'm just studying the outcome. So you're not done with this mentorship when you complete it. You still have to make that segue. Eventually, if you're going to invest in live funds, you have an experience of trading with live money that you have to go through too. And that's all solo. It's all on you. But if you stick to the things that's being taught to you, at least you'll have a framework to work with and not just simply just go crazy with yourself. It looks like the euro wants to reach down in here. I guess they got tired of waiting and seeing if I was going to close this session. Man, ICT, stop talking. We got to get this euro to go lower. I'm going to outweight them. You got time of day to work within, buddy. I don't. I can leave this recording all day. What size of an account do you need to make $300 a week? You could probably do really good with a $100,000 account. You probably wouldn't take much effort at all to make that. $100,000 you could do really well with that. You could probably get 350 easy. But you probably have to stay up all London to get that. In seriousness, to make $300 a week. Let me see here. If I went back in time and I said I had to make $300 a week. Let's see. $5,000 times that 2%. $5,000. $5,000, and if you do a 3-to-1 using 2% risk, you can get $300 on that. So here's the euro reaching for the 108.90 sell stops. Is $10,000 per week a realistic target? Well, for demo, it's realistic. If you're over leveraging and you're putting as much as you possibly can, not worry about margin calls. But to make $10,000 a realistic weekly objective, if you have a large account, obviously it's all relative, how much you're earning and how much you're losing. But I think the question, that's why I answered it. The question was, it was realistic. What do you need to have to make about $300 a week? Yeah, I'm trying to outlast them today with the euro. Let's see what the dollar's doing, see if it's running for this buy stop. Ooh, look at that. They took out their equal highs, but it doesn't mean it can't just pull right back in the middle. We have to expand up. We already identified these equal highs here, so we want to see a price run through. Next level here to watch is yesterday's high. So if it gets through that, we'll probably want to see some expansion. What sound did I make? I don't know what I said. Woohoo! Let's look on a 5-minute. Gives more volatility. Well, I think if we put it on a 1-minute, at least it'll feel like we were trading London. Yeah, I'm just going to say it. I think they're out here watching what I'm doing. And they're basically trying to screw up whatever they can. Because if they can unseat me, then there's going to be no faith in what I'm teaching. And everybody will just forget about it. Merkel's sitting at her terminal right now saying, look, we got to get this guy off the internet. What are we going to do? We got to rub him out. Little do they know, I'm still short. Woohoo! All right, so we are looking for the sell stops below these equal lows over here, 28th and May 1st. So that's where our liquidity is. We've already ran out the sell stops below here. All right. No, I'm not short. I'm just kidding. I'm saying that to see if they get a reaction. I'm still short and watch it go up 90 pips. Norman says, never trade the ruble or Putin will send a death squad. Oh, man. I honestly, I hope for not only for your sake, but for my sake, because when the markets are really running and they're moving around, I promise you, I will be very entertaining, and the markets will be able to be responsive to the levels I'm looking for. That's very fun. It is so much fun to be in that environment where the markets have volatility and we see where they're going, what they're keying off of. But I can't stress it enough. I'm so disgusted with the way the market's trading right now. Like I want to see something happen big, and it may have to be something bad. I don't want to wish anything bad on anybody, but we need to see something happen to get these markets moving around, because they're just sitting and waiting for the next shoe to drop, and it's difficult. It's very difficult to get movement. When was the last period when the market was really good? Well, the market was decent for us last fall. Is it realistic to only trade in London live in Europe? You're finding that you're most profitable and you're not tired. That's the benefit of having all the information, because you can selectively pick whether you're going to be a London trader or a New York trader, or if you're forced to work in the time of day where you can't be up for London because you got to go to work or start your business, and you're doing your business or you're working during the New York session. It kind of leads you to doing what we taught you in April, using the Asian session to get your entries in. Trust me, there's no reason for you to feel like your circumstances are going to limit you. There's something you can do that will provide you a means of trading, and you can still participate in whatever moves that take place in London. You don't have to be awake. Don't think you have to be up doing that. You don't. Do you have any more insight to teach on price action formations that is applicable to all asset classes? Yes. So every time price makes a high or low, there is a reason behind it. Yes, absolutely. Anytime price takes out an old high or an old low, you got to be asking yourself, what would be the reason for that? That's why I like Turtle Soup. Turtle Soup gives me context. So I'm looking for a move above an old high to either justify continuation on a larger move or a higher time frame premise, or to see them take the stops on a short-term manipulation to get short on. And by having that storyline premise behind why you're looking at price, it helps you with bias. It helps you with overcoming fear. Like, I know this isn't that much of a move, okay, but a lot of you are still scared to sell above that high. Like, you would never think that's a comfortable position to do. Going up here, right above here, I'm going to sell it. It doesn't make sense. It feels like you're breaking out. It's really strong. And that's why you have to do these exercises to just basically desensitize you to it. And once you understand the conditions and the rules that we look for, it's no problem to do over and over and over again. You won't fear taking losses. And a lot of you, that's what you only have to do right now. I mean, you know enough that if you just simply would just practice and execute on it, most of your problems right now are all in your head. You're afraid. You're afraid if you have a string of losses. You're afraid if it doesn't continue in your favor. What happens if you go into a tailspin? Are you going to nuke your account? Let's see what cable's doing. Oh, they're holding cable on consolidation. Citadel. Yep, there we are. So they're holding cable on consolidation. They're dropping euro pound. So euro pound needs to go below these lows here. We have a gap right in here. So this might be a really short-lived decline on fiber. So we're looking for that. That'll take the sell stops closing that gap. So if it goes down anymore, it probably is only going to go to reaching for these, if at all. So just be mindful of that. All right, I'm going to close this one because this is a very, very, very long video. And the folks that sit and endure this are going to be like, really, I sat through all that. What did I get from it? But, I promise you my time. So it is what it is. The euro finally moved a little bit, didn't move much, but right side of the market again. Like I said, once they relax the market and they can see movement, man, trust me, you will be elated. It's going to be crazy. It's so much fun to see how it moves and accelerates away from the levels we're looking for and go right into the profit. We're going to have the window of profitability down into like a 30-minute time window, and you'll see they'll go right into them. You'll love it, trust me. But you just got to get a guy through it. They're not going to hold it like this entirely until September's end. You'll see it. September's month is going to be question and answer. But if we maintain this sloppiness and tight ranges in May, I'll do the question and answer stuff. But I'll also do. I don't intend to do live sessions over charts in September, so that way you know what I'm doing. I'm only answering questions that's been posed to me in the forum that have been remaining after all the content's been released to you. I'm going to create a thread. That way you guys ask whatever it is that you're having struggles with that you need closure on. I'll spend that time answering those questions in video format. That way I can give you examples and show you why it is what I'm saying. But I'll overlap that with trades. Because September is a really nice month. I mean, that month is usually a very liquid month. And that's it. So for those that hung the entire time, awesome. You got the Ironman Award. If you didn't lose consciousness and didn't fall asleep, you get a bonus for that too. But at least you can see, even though they kept price in a tight range, for a moral victory alone, we had the direction right. We looked for the market to go up, create a sell scenario, and then sell off. We looked for the dollar to create a low, which we basically almost nailed almost right to it. We went just a little bit below it, and we see the responsiveness. So you can forecast, you can see how you can frame the setups well before London. I mean, I gave you this last night before, 8:40? I think that's when it was posted to the forum. So anyway, it'll get more exciting than this. And I'm just going to leave it at that. Just watch and see if we get through this high, if we gain momentum. We're looking for these buy stops over here with the X's. And that'll drive euro down into these sell stops. And I would like for it to stay just below here, maybe go down maybe 2 or 3 pips below that, and then consolidate. Because if we get that, what we'll look for is a range expansion on the upside. Like if we don't go much below here, this is a better scenario. Say we don't go much below this low here, and this is the low of the day. I would like that if we consolidated here, left this void. Because then what we would be looking for is 8 o'clock tonight in New York time, price to want to rally up and close that void. That's our sell, and we're making a run for the gaps. That's the outline I'm calling for right now. If it changes and say we go below these lows here, I would like for the price to consolidate around that level and not close in that void, but start to trade up in late New York, then consolidate around the same level here. And then we would still look for that scenario to trade up, close in that void right there, and then make a run down to this level here and below this level at 108.55 for the sell stops below that. All right, so that's it, folks. If you're still in it, awesome. I just didn't want to hold on to it, and I didn't plan on being on here this long talking, but you guys got me jibber jabbering, and you know me, I got a mouth. Thank you very much for your prayers. I will touch base with you later on today, again reminding you the schedule of what I have to do with my family this week, and then we'll be back at it again with something outlined for 8 o'clock tonight in Asia. Awesome. Thank you very much.